Hello everyone. Hello everyone and welcome back. Well, welcome. Happy New Year's. Welcome to the first live stream of 2024. Now, you might ask, what the heck is the thumbnail? What has gone up 31,000% in 2023? Well, a lot. It's actually, I know it's a bit of a clickbait, so sorry about that, but it's pretty interesting. It's basically what happens if you invested $10,000 at the start of 2023 in one stock and then invested in the best performing stock each and every month. We're going to have a look at that in a second. Now, I promised you I tried to do some new live stream styles, so let's try and do this one. If we go like this, ta-da! So 12 stocks turn $10,000 into $313,671 in 12 months. Pretty good returns if you ask me. Now, by the way, if the sound is okay or there's something wrong, let me know in the chat. Hi Joseph, hi Martini. This is not a martini, but this is a tea. We'll take what we have. How was New Year's for all of you? Did you celebrate? Did you stay at home? Was it a chill night? Let me know in the chat. So yeah, basically, maybe I can even make myself here a bit bigger. How do I? This one as well. Usually I do this on StreamYard, and this time I decided to do this on Streamlabs. So bear with me. Voila, much better. I made myself a bit bigger. So yeah, welcome everyone. 16 people here, January 1st. I know a lot of people have better things to do, especially on the Monday, first Monday of the year. But I appreciate all of you for being here. So basically, I'll address the thumbnail first, which is basically this. So they say here, if you invested $10,000 in January in the top performing stock in the S&P 500 and reinvested that in each month top performer, including Illumina in December, you'd have $313,671 as of today, which is pretty crazy. Of course, how would you know which is the best performing stock of each month? You don't. It's just a bet, I would say. I mean, a guess. So if we go, let me just double check. Okay. If we scroll down, we can get the full list because the other things are pretty boring here. So number one, in January, basically 1 year ago, the top performing stock that month was Warner Bros. Discovery. The stock gained 56.3% during that month. The S&P 500, only 6.2%. So in 1 month, you already made $5,630 in January. I mean, starting off the year pretty strong in 2023. Then if we look at February, we have a stock in the healthcare sector, Catalent, or maybe this is not the way I should pronounce it, but anyways, that was up 25.6%. The S&P 500 was down 2.3%, and so during that month, you also made another $4,000 or so. In March, it was Intel, 28.7%. I mean, basically in March, if you did all of these three stocks, you would have more than doubled already your investment in 3 months. Pretty incredible. Then in April, you have Chipotle. I know it's Chipotle. I know. I can already hear some of you writing in the chat. Basically, that was up 21%. The S&P 500 only 1.5%. In May, Nvidia soared 36.3%. Now you would already have 4x your investment in just 5 months in 2023. In June, you have the cruise line Carnival. I think we talked about it probably in May of 2023, or maybe even June. I can't remember exactly, but I know that it went up and then dropped yet again. So, okay, but in June, it went up 67.7%, whereas the S&P 500 went up only 6.5%. Here, you would have ended June, so half a year, with $69,878 when you started the year with only $10,000. Then in July, you have Zions Bank Corporation, that was up 42.4%. In August, Arista Network, 25.9%. September, a pretty slow month here, but as you can see, the S&P 500 was down close to 5%. In October, would have invested in Allstate, that was up 15%, whereas the S&P 500 down 2.2%. And then, of course, the last 2 months, great months. I didn't know that Expedia went up 42.9% in November. That's a pretty big push for that company. And then in December, Illumina was up 36.4%. And so you end the year. I mean, look at this. In October, you had 61,000, let's call it. And then in December, so basically 2 months later, close to doubling in 2 months. Crazy. Now, I do want to go and have a look at a couple of those companies, Expedia being one of those. Let's have a look at Chipotle as well. And then maybe even Warner Brothers Discovery, if you want that. Damn it, did not notify. The notification that I went live, I think YouTube pushes the notification a couple of minutes after I go live, not at the same second, even though it's pretty strange, but I mean, you're here, so welcome. So yeah, let's have a look at, let me just change this 1 second. How do I do this? Not game capture, but would have been much simpler on Streamlabs. I don't know why I did this, but okay, we'll have to live with it. Okay, this one. Let's do this, and then that's not even what I want. Anyways, Ian asks here, no, I just need you to tell me what the stocks will be for 2024. Yeah, I mean, yeah. If I had that crystal ball, that would be nice to know exactly which stock, which month. I wouldn't mind knowing all of that. Even half of it, right? Even half of it is already pretty good. I mean, look at from January to June, you have close to 7x your investment. That's nuts. I mean, give me just 6 months and I'll be happy. 6 months and I'm good, and I'm good to go. But yeah, let's pull up some charts. What small cap is a good buy for 2024? How small is the cap? I mean, very, very small, under $1 billion, or small caps? Because I've seen people call small caps companies under $1 billion, companies from 1 to 10 billion. Let me know what small cap definition you want. Okay, so Expedia. Okay, as you can see, Expedia in November, yeah, that stock really jumped pretty high. Yeah, year to date doesn't really matter that much, but from a year ago, if you look at before November, so let's say we started the year last year, January 3rd, it opened $88. And now if we fast forward to November, it was only $95. So it went up $7 throughout 2023. And only then did it increase this much. So all year you would have made nothing unless you sold here the double tops, one in February and one here at the end of July. Then okay, you would have made I think 50% or so. But any small cap range, it's difficult to say. I mean, with probable rate cuts, let's say, in the first half of 2024, that's my prediction and opinion, a lot of small caps will go up. I mean, let's take Fiverr, for example, pretty small. They're doing quite well financially. Growth isn't there anymore. I mean, that much compared to what it was during the pandemic, but with rate cuts, I think the stock can go up quite a lot. Obviously, I own Fiverr, so I'm a bit biased, but yeah, it's one of those picks. There are probably plenty of others as well. Lemonade, one of those as well. So yeah. Anyways, Expedia. Here you can see at the bottom, actually you cannot see because my subscriber goal is, so let's do the transition. Okay, now you can see. So as we've seen in the past, EPS, bottom line here, is growing much faster than the top line. This is also why we have a forward P of 12.6 times compared to 27.8 times in the last 12 months. So that definitely could have given the stock a push. And then the predictions for the coming fiscal years, I mean, bottom line will grow 26% or so year over year in 24 and 25 fiscal years. And sales will only grow between 8 to 9%. So yeah, you're definitely getting more value. If we look at the multiples, I'm now a bit disappointed that I did not cover this company, to be honest. I mean, we covered Airbnb a lot, but we did not cover Expedia. And even we didn't even cover Booking. So let me write this down. Let me write this down because I don't want to forget. I still write on paper, even though I have a computer right in front of me. So, Expedia and Booking. Maybe. Okay. Maybe we can do an Expedia, Booking, and Airbnb video comparison. That could be something. So basically here as well, price to earnings, that's next 12 months, EV to EBITDA, price to sales. Price to sales is a bit close, but all the rest, PE and EV to EBITDA is much cheaper than the 5-year mean. Of course, you had this whole period here where that was the huge premium. So it obviously impacts the mean. Let's do 10-year. If you look at the 10-year, still we're now 12.6 times compared to 24.7 times. So yeah, you're getting this company at a cheaper valuation. Price to free cash flow is higher. So let's see here. Shares outstanding have been coming down. Free cash flow has come back in a positive area. And the EPS estimate, the 5-year growth rate, sits at 32.8%. So yeah, I mean, I am very disappointed now that I did not cover this company in 2023. But oh well, we learn. We learn. I'm interested in your analysis on Pure Cycle. It's a water utility that's developing residential lots in Colorado and selling to home builders. Well, to be honest, my face here is again way too big. It sounds interesting, not gonna lie, but it sounds very complicated as well. So, yeah, my opinion here would not really add so much value to you, to be honest. How will Nikola do this year? Probably rolling down the hill or something. Can I review Nikola? I mean, I don't understand. I can understand why it gets a lot of attention, but let's be honest. Why would anyone want to invest in Nikola? I don't know. But hey, here you are. Price to sales, you would say, oh, it's much lower than before, but yeah, it's it's still 6.2 times in the next 12 months. By the way, this is on Koifin. Link is down in the description for 20% off if you want. I was wondering if you sold any of your HOOD shares. No, I did not sell any of my HOOD shares. Will I live to regret it like last time? I mean, like last time. Last time I bought, it went up to $12, $13. Didn't sell, could have made a quick 30%. It dropped back lower. Fine, I bought more. Now, no, I'm keeping those shares. No intention of selling as of right now. I expect to hold Robinhood shares throughout this year, unless it reaches a crazy price that I'm just saying, okay, enough gains for me. I'll probably start selling if it suddenly reaches in the next 6 months at $20. I'll probably sell some shares, yes. But I will announce it on the channel way before that happens. Nikola, $1 billion market cap. As you can see, yes, sales will increase quite a lot in fiscal year 2024, but yeah, the CEO said this will be their best year. I mean, I can understand why. When you're starting from zero, I can understand. But still, I don't know why I would touch Nikola, to be honest. I mean, what's so appealing that you need to invest in Nikola when you can invest still in Tesla, in Rivian? I mean, you can even buy shares of BYD or NIO or XPeng or all those companies, Ford, if you even want another car maker. What are your thoughts on InMode? I did not look at InMode, so no thoughts there. But since you asked, we can put it here, and you can get a major overview of InMode. Market cap 1.85 billion. I mean, it says here year to date, but it's last year. It's down 37%. I mean, for this, I don't know. There is not much growth at the bottom line, but top line, not even double-digit growth. So, yeah, it's 4P of 9.1, but okay. I don't know. They could come out with something incredible, I guess, but right now the analyst expectations are pretty low. The price target, there are only 6 analysts, so not that much. But average price target sits at $31.2, which represents 40% upside. Again, price targets change over time. Valuation compared to its mean, yes, it is much lower right now. And if we go, this probably looks bad, yeah, as expected, but at least free cash flow per share goes up, so that's good. Yeah, I mean, okay, now I'm getting a bit more interested here. Where is it? Here. Yeah, I mean, probably a lot of people bought Nikola for fun, but I don't think it has been a fun ride until now. So, yeah, okay, InMode, you can see can see right here, free cash flow per share has been increasing throughout the years, which I'm very impressed actually. Interesting. Very interesting. Okay. You have piqued my interest here. Maybe I'll look into it more. Thoughts on Nubank? I hold it. I love it. Great company, great management. I talked about it in the FinTech Stocks video, part one. I think it was in part one. If you haven't watched that, go watch it right now and then come back to the live stream, or go watch it after the live stream. 21 people watching, 26 people watching. Thank you all for being here. If you can hit that like button, that would be great. Again, Happy New Year to all of you. We're going to do way more live streams this year than last year. You all like it. I enjoy it. Get to spend more time with my subscribers. You ask great questions. I discover new companies, which is great. You're welcome, Bruno. If you have any more questions, let me know, and maybe we'll have a look at other stocks. Oh yeah, I said we're gonna have a look at Chipotle. So that stock was up close to 65% in 2023. Yes, it is very expensive to buy it because it cost $2,286. Candidate for a stock split? Maybe. Market cap $62.7 billion. Forward PE is not cheap at all. 45.5 times. Interesting. Here as well, you can see bottom line increasing much faster than the top line. Analyst price target sits 2% lower than the price we're at today. So, okay, not that big of a deal. Probably here shares outstanding. Yeah, okay. That was a given. So yeah, free cash flow per share continues to increase here quite a lot. They're buying back their shares. So that's, I mean, even if the valuation is expensive, that's basically how you're getting value from this. And then if we look at the valuation compared to the 5-year mean, I'm surprised. I thought it would be more expensive than the 5-year mean, but I guess not. Forward PE 45.5 times compared to a mean in the last 5 years of 53.8 times. EV to EBITDA is a bit of the same. Price to sales is a bit more expensive, but for this company, I don't really care about that metric much. Price to free cash flow in the last 12 months is cheaper. So, okay, maybe I think they're becoming a bit more efficient. So, yeah. Thoughts on NVIDIA? Given exports restrictions. I think we've seen reports, NVIDIA, AMD, Intel, they've probably already found some ways to go around those restrictions. I don't think it's going to impact them that much because the demand is just through the roof, in my opinion. When will Chelsea buy a proper striker? Hopefully this month, but probably not. Probably in the summer. I mean, I don't think we really have a choice, but yeah, probably in the summer. I think Osimhen is a good candidate. I would have loved to seen Ivan Toney from Brentford, but I think his favorite club is a red one. So yeah, okay. If you're not a supporter of Chelsea, you shouldn't come. I think NVIDIA found a way around it with a lesser chip. Yeah, exactly. Because the restrictions are on the AI capabilities and stuff like that. So they've probably made a downgraded version of the H100s or H200s or whatever they were selling before, or A100s. So that's one of the ways probably. Do you think when the Fed starts to cut rates, will the market spiral downwards? I don't see why. Look, it's very simple actually. No, it's not that simple, but I'll simplify it. The market is anticipating rate cuts, right? That's why we've been going up like crazy in November and December. Now, the market is still waiting for the rate cuts to happen because currently we're still in a very, very high interest rate environment, which hurts a lot of growth companies, which hurts people that want to buy a house, car, whatever. Once the rates come down, it won't come down by 5 percentage points, right? It will come down, what, in 2024 by 1%? Maybe, something like that. We will still have interest rates at 4%, at least in my opinion. So we're still quite a long way to go until we go back to the very low interest rates environment. So no, I don't think the market will spiral down. I think geopolitical issues and elections will affect the market more than rate cuts in 2024. Can you look at Boston, Omaha? Yes, I can. Boston, Omaha. Yes, I can. Okay, let's first start with the overview. Market cap, close to half a billion. Okay, I thought half a trillion, but then I was like, nah, impossible. Price per share, 15.73. Last year it was down 40%. Has no forward PE. Okay, that's already not that great, but let's dig in. Fiscal year 2023, sales growth of 18.79%, but then fiscal year 2024, much lower, 7.7%, then another 9% year over year. But in fiscal year 2025, analysts are expecting EPS to be positive, 20 cents. Price target here is, okay, only 2 analysts, so I'm not even going to bother with that. Here, EV to EBITDA is much lower than its mean. Price to sales as well, and that's about it. That's what we get here. Something has happened. If you can explain why there is now an increase of unprofitability here, that will definitely explain the 40% down in 2023. What has a more optimistic future, Nubank or SoFi? And is it a better investment if you had to choose? Well, I hold both, so there is that. Again, SoFi, it's a play in the United States. Nubank, it's a play in Latin America. That's also the big difference there. We can do this. We can do this, of course. They won't have the same metrics for us. So SoFi is a bit more expensive. No, it's the same. 4 times compared to 3.9 times sales. Nubank is obviously way more profitable than SoFi. If we go look at this, I'll have to put other colors here. Nubank's a more purple. And purple. Okay. So Nubank basically has over $1 billion more in revenue in the last 12 months. Free cash flow positive here. Return on equity positive. Then we've seen the gross profit margin. It's not 100%, but it's high. I heard inflation is going down, and same with unemployment. Could be good for the market. Well, at first they were like, oh, unemployment doesn't go down, so the Fed will not cut rates because blah blah blah. We need to have over 4% unemployment unless something bad happens. But again, you never know. The world has surprised us since 2019. So 2024, I don't know what might happen. But the job market is certainly more resilient than what people thought. That can obviously change if we go into a recession. But yeah, we'll see. We'll see what happens. MTH appeared on my screener in February. Are you familiar with the company, or can you have a look at it? MTH. Meritage Home Corporation. Never heard of it, so no, unfamiliar with that. Yeah, obviously fiscal year 2023 they would be taking a hit. Makes sense. Yeah, I mean, if you can give me more info on what they do, is it about home building? Then probably in a low interest rate environment they'll do a bit better. But I mean, the stock itself has gone up 90% in 2023, even though sales and EPS has come down. So that's interesting. Yeah, the other company was, what was it? Warner Brothers? Yeah. The top performer in January 2023. Yeah, okay, so last year, yeah, they performed quite well in the first month, and then since then, it has gone down. So, yeah, for someone that had bought at the start of the year and not sold the top, you would not have performed that well. I mean, you would have been up 20%, which is a small underperformance to the S&P 500 for 2023. And here, yeah, fiscal year 2023, whoa, not profitable, but then fiscal year 24, yes, with only a 1.8% sales growth year over year, not that much, but profitability is becoming better. Yeah, okay. Revenue's gone up, free cash flow, margins come down. This is the weirdest thing, but this is the thing we've seen like in the last 3-4 years, things like that. Interesting. I mean, price to free cash flow for 8. It was 9.4 times before, it's now 5.2. And then price to sales is under 1. Huh. Interesting. Very interesting. Average price target 27 analysts here, 16 have a buy rating. Average price $16.64, representing a 46% upside. Not too bad. Not too bad. ARM, we've looked at it when it went IPO or right before it went IPO. Yeah, it's a $77 billion market cap. It makes no sense. That's my thought. It made no sense at 60, and even when it went a bit lower here. I mean, it's a great company, right? Great company, great architecture, but close to 75 times forward PE, sales here only $3 billion for a company of a market cap of 77 billion. It doesn't make any sense. Again, great company, very overvalued in my opinion. Very overvalued. I mean, look at this. This is crazy. Either there's going to be a reset, or there's going to be a huge jump in revenue and in earnings for this company, net income, over the next year or two, because this is not sustainable. Again, great company, expensive. Any thoughts on DraftKings with expansion possible? Yeah, we talked about DraftKings not so long ago on the channel. I did a video about it. So to get the full answer, go watch that video later on. But yeah, definitely a great comeback by DraftKings. Great comeback. It was up over 200%. So yeah, great comeback by that company. With expansions in other states, yeah, they could add a lot, especially to the bottom line if they get approved in many other states. They have a slide in their presentation where they show you exactly what will happen. But yeah, definitely a great 2023. And again, I said, despite being up 200%, I think this thing can go up even higher in 2024 if, of course, the catalyst happen, which they think they are pretty convinced that those things are going to happen. The analyst estimates here for fiscal year 2024, sales growth of 26%, EPS 14 cents, then another 20% growth in sales in fiscal year 2024, and then a 680% growth in EPS. So yeah, definitely. I don't have I actually don't have price targets for my core holdings because I don't really need them. So for Nubank, I have no price target. The only stocks I put price targets on are stocks that I don't have in my core portfolio that are in the trading portfolio, which is basically short term, which are right now PayPal and Robinhood. And if you're going to ask when will I sell PayPal, if it goes up very fast to 100, I'll probably sell what I've put in and then let the rest ride. If the next quarter or two, probably 2 quarters, if the company shows me and probably the market as well that it can turn around and execute correctly, it will probably enter the core portfolio and just let it ride, because my average cost on that is $55, which I'm pretty happy with that. So yeah, that's the answer. Oh yeah, you know what? Let's actually do this already right now. Let's compare Booking to Expedia. Okay, so Booking is more expensive on every metric here. Okay, that answers my question. And Booking has had also a great 2023 and some good projections as well for the coming years. Okay, again, I'll make a video probably comparing Booking, Expedia, and Airbnb. So stay tuned for that. Payc, what's that? Paycom software. So many payment companies, drives me crazy. Yes, so it took a hit here and then it went up, like you said, 42%. Can you check them? Maybe also have some thoughts about that. Well, market cap 12 billion, let's say, forward PE close to 26 times, with EPS expected to grow 8 and then 16%. Not bad. Let's see. Definitely much cheaper than the 5-year mean, but I don't know the reason why it crashed after the earnings. So that might change my opinion on it. Shares outstanding hasn't really moved that much. Okay, no problem. Free cash flow per share has increased quite a lot in the last couple of years. So yeah, interesting. I'll write it down as well. Paycom. Thank you for that. If you can explain why it crashed, that would already answer one question. Then, what do we have? Can I even... No, in Streamlabs I cannot highlight comments. Okay, great. After a prolonged bear market in China, do you think Chinese stocks will do well in 2024? Well, Bruno, if you look at Pinduoduo, PDD, Pinduoduo had a great year in 2023, up close to 80%. So, some Chinese stocks have done very well in 2023. Alibaba, not so much. But in China, you never know. One day they'll be open their economy. The next day they'll lock it down. They'll attack Taiwan. They'll do whatever. I mean, I think in the New Year's speech, again, Xi Jinping said we are going to reunite the whole of China, blah, blah, blah. So you never know with these guys. To be honest, F them. The government. Gamer D, I was gonna buy PayPal when they dropped heavily. I wish I would have. I mean, it dropped heavily a couple of times, so don't beat yourself up, because you could have bought it at 150, at 100, and then at 70, and then another one at 50 something. So the bears were saying the company would lose more value in the coming years. Well, the bears are not always right. I mean, the bears have lost a lot of money in 2023. Let's be honest. And I've covered PayPal numerous times on the channel, showing how dominant this company still is around the world, despite the stock being beaten down. And the stock is beaten down for good reason. For good reason: bad management, bad execution. Now with new management, maybe better execution will follow. The next quarter and two will tell us a lot. Thoughts on Cooper Standard. Top-ranked parts supplier to major car makers, very well managed, and a play on small cap recovery. Possible return to pre-pandemic earnings, share price. Let's see. Is there a company called Auto Parts or something? No, that's AutoZone. I'll first show you AutoZone something. This is incredible. You've probably already seen this graph a couple of times, but look at this. No, not this. This is AutoZone. I put in the last 20 years. Look. This is the best graph you can actually see. I need to buy a new chair. Look, this is incredible. For these types of company, I mean, if you didn't buy all those shares, you would have had way less value creation. But I mean, this green ski slope is quite remarkable. If you look at, let's put this all the way down, 80% of shares outstanding gone in the last 20 years. Incredible. Okay, now you said Cooper Standard. Not the same picture. Not the same picture, but it doesn't really say much. Free cash flow per share has been red for a couple of years now. Not great, but let's dig deeper. Market cap 336 million. I mean, last year it was up 115%. Quite a lot. One last thing. Okay, so there clearly was here a down cycle, probably because of the supply chain issues, I would assume. And now that we're going back up, probably free cash flow should go back up again. Correct me if I'm wrong. Who asked the question? Drew. Because, yeah, I mean, it follows return on capital, gross profit margin. Okay, let's look at the analyst expectations. So we only have for fiscal year 2024 a 5.8% increase in revenue. EPS still negative, but quite an improvement year over year. Maybe we can get a free cash flow estimate here. Nope. But cash from operations, has gone up from negative to positive. That's a song from negative, or from Pitbull or something. 107 million 2023, and in 2024 the estimates are 185 million, so an increase of close to 73%. Okay, interesting. You know what, it goes in the book as well, because I want to do more list videos, so this is a good one to put there. Cooper Standard. Thank you for that. Paycom is like a HR type of payment processors for companies, just like Paycor. Paylocity, too many payment companies. Yes, too many payment companies, and none of them actually come up with a very good name. It all starts with pay. I mean, come on. PayPal was the first, so okay, I guess they get that name, but come on. Blah. The reason for the crash of Paycom is called Betty. Their automated software that resulted in a short-term decrease of revenue. I call this an opportunity. Interesting. Interesting. I'll write this down. Betty. Okay. Pfizer. I'll probably put Pfizer in a dividend video that will come out soon enough. So Pedro, you'll get your answers in full in that video. Valuation thoughts, but to recap what happened in 2023, of course, after the vaccine thing, blah, 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 it was a down year bound to happen. So that's 2023 for them. Okay, first Justin. Justin asks about this company, AerCap. No clue what they do, but aircraft leasing company. Interesting. Aircraft leasing company had a good fiscal year 2023, it seems, with sales increasing 8.7% and EPS 12.5%, but in the next 2 years, apparently it won't grow that much. So, although it has a forward PE and actually a past PE as well of just 7.1 times, it's not like the E will increase that much in the next year or two, but a company with close to no growth gets a PE of 8.5 according to Benjamin Graham's formula. So I guess 7.1 times is a good, okay price to pay. What are the analysts expecting? 11 analysts, 4 strong buys, 7 buys. Average price target $81.2, which that means 9.3% upside. Okay. Big increase since 2021, I see. In free cash, in free cash flow has become positive, but revenue has gone up, return equity gone up, gross profit margin is recovering. So definitely there was, during the pandemic, probably they took a hit. And here I would assume, who asked this? Justin, I would assume they bought a company here back in October 2021, because otherwise I don't see why this jump here is so large. It's either buying a company or issuing new shares. So I would guess buying a company, because that has been the answer for the last couple of live streams where I've seen things like that. With regards to valuation, we're pretty close, if not a bit more expensive overall when it comes to the 5-year mean. So that's what you get as a summary for that company. Cloudflare Net, that is, yes. Cloudflare, wow. I remember when this stock was way higher. Currently, PE is very high here, 161.4 times. Okay, there's definitely more to the story here. I haven't been following Cloudflare that much. You get diluted as well as an extra bonus. Free cash flow per share has increased over the years, although it's still negative. But as you can see, EPS is expected to grow quite fast. Price target, yeah, as I said, the stock is pretty expensive right now. Again, we're entering at the end of January. Earnings season will start again. You will see new price targets. Stock will be re-rated and things like that. Wow, it was at $40 in 2023. I didn't know this. Interesting. Okay, EPS has grown quite a lot in fiscal year 2023. And in the next 2 years, it's basically going up another over 50%. So yeah, you are now paying a forward PE of 161.4 times. But if you look at the 2025 PE expectations, you're paying less than 100 times. Which again doesn't make it a very, very cheap company, but an important one nonetheless. I used to work for PayPal, by the way, a couple of years ago. Great company. I'm surprised they survived all these years, knowing how competitive the financial market is. Well, it's because, first of all, they're not just, I mean, yes, they're in fintech, but very different to, let's say, SoFi and all these other companies. I mean, they are the dominant checkout option. That's just a fact. So I'm not surprised that they survived all these years since, well, you go to checkout, you see PayPal, usually you use that option unless you're an Apple user and you have to use Apple Pay when you go and check out, but usually you see PayPal, you pay with PayPal. I've shown you the charts. It's the only company that is a bit more dominant than them is Visa in, I don't know how many, 67 countries or something like that. But yeah, I mean, survived is not an issue. It's to dominate, become more profitable, and continue to grow. That has been the issue for PayPal in the last, in the last couple of years. Because as you can see right here, I'm not even talking about this, right? This demise here of the stock. I'm not even talking about that. I'm talking about God, heaven, hell, earth. One Flew Over the Cuckoo's Nest. Great company, great movie. First of all, they're buying back a lot of shares. And so, yes, free cash flow per share goes up, but it goes up because they're buying back a lot of shares, not because of this. Not because free cash flow has increased that much. Free cash flow has actually stayed flat for a lot of years. Yes, it has increased before, thanks to the pandemic. It's a bit higher, but as you can see, for this company, you would have liked free cash flow to not stay between $4 to $5 billion. They're buying back $4 to $5 billion worth of their own shares this year. You would have liked to see this continue to increase. And I think that's what's going to happen in the coming years if the new CEO and the new teams and the new structures work out. I think we're going to see free cash flow per share increased. I would love to see that, which could also mean that they, one, can invest more in the business, and two, buy back even more shares if these shares don't really move much. So yeah. My pleasure, Drew. So yeah, that's basically PayPal. Again, it's a company that doesn't really need to do that much to get its stock moving, but doing more could definitely improve the future of this company. How do we do this again? Poof. Huh. I want to know if my chat pops up on the screen here. I'm not sure. It should be, but I don't think it is. Strange thing, but anyways. I want to show you a couple of things right now. Thoughts on Trimble. First time hearing about that company, so I don't know. Gamer, I said a couple of years ago, Sorry was with them in 2012, and yes, their brand is a great name, so maybe not surprising it as, yeah, okay. I thought when you said a couple of years ago, 3-4 years ago, but yeah, 2012 is now 12 years ago, which is when I graduated high school, which now that I say this out loud, crazy. Yes, this year I turned 30 this year. Jesus. Yeah, I want to show you this. A couple of articles. One with regards to China. So just to make sure that you can see, this is on Seeking Alpha. Also a link you can check out in the description below for 30% off, limited offer for the New Year's, 30% off the premium. I'm an affiliate, it helps out the channel, but you've seen this website countless times on my channel. It is extremely helpful because if you're not subscribed, then you can only read 3 articles a day, which sucks. Let's be honest. So yeah, Macau casino revenue soared 334% in 2023 to trigger non-gaming investment stipulation. I mean, for a place that is not doing that great, which is China, revenue being up that much is incredible. But remember, this is year-over-year comparison over a year of absolute garbage in China because of lockdowns and stuff like that. The year ended strong with gross gaming revenue 433% higher in December. Okay. That's interesting. The GGR mark, gross gaming revenue, was also 16% higher than the level seen in November, which is likely to alleviate concerns that a new virus in China would hold back traffic. Notably, hotel occupancy rates in Macau were over 90% for the last 10 days of the year. Okay, interesting. So here you can maybe, let's say, take some positive sentiment if you want to talk about Chinese investment and Chinese market. I mean, if the numbers here were bad, then yes, wouldn't have been great. Analysts think the casino operators have anticipated the stipulation would trigger and have plans in place already on how, I mean, whoever wrote this should have Grammarly installed for one, and two, double check what they've written on how to increase a non-gaming investment in a strategic manner. Looking ahead, gaming revenue growth rates will slow down in 2024 as Macau laps the expiration of the severe zero-tolerance COVID restrictions in place in 2019. Like I said, the year-over-year comparisons. This is also something you have to look out for 2024. Some companies that have grown tremendously in 2023 will have much harder year-over-year comparisons, whereas companies like, for example, let's say Alibaba or PayPal, or a lot of fintech players, will have much easier year-over-year comparisons, which when you read the headlines would look much fancier, much nicer than just seeing a 1% up year-over-year, for example. I will talk about NIO in a second. Let's answer a couple of questions here. TMF reached 75 in first week. There will be demand as interest falling and last time to buy bonds with high yields. Interesting. TMF reached first week. Let's see. It has rebounded quite well since October. Quite well. Got to go. Thanks for the coverage. My pleasure, gamer. Thank you for joining. Hopefully I'll see you in the next live stream. Happy New Year's to you and your family. NIO. So December deliveries, we did a video about NIO, I think last week, when I talked about what they will have to do to beat their own expectations for the quarter. They needed a minimum of 15,000 to reach the low end of the 47,000 deliveries for the quarter, which is down quarter over quarter, but still the top estimates for them was 49,000. So definitely with 18,000 deliveries in December, they are beating their own expectations. As you can see here, October and November, let's say both of them 16,000 and now 18,000. So this would mean 50,045 vehicles in the fourth quarter, beating their own expectations of between 47 to 49,000. Probably expect the stock tomorrow to jump even more, even after the investment of the Abu Dhabi firm that invested in the company, that took a stake in the company as well. So yeah, that's good for NIO holders, good for the company as well. That increased close to 14% year over year. 12,048 premium smart electric SUVs and close to 6,000 premium smart electric sedans. They are closing in on 500,000 deliveries overall, which is not bad. Congrats to them. So yeah, good news. Good news for NIO, I guess. Dun, dun, dun. Then we also had XPeng. So XPeng, they announced record delivery of 20,115 deliveries in December, which is a monthly record for them. It's up 78% year over year, bring the total Q4 total deliveries at 60,158. We see more and more of those record deliveries, especially for Chinese companies, which means that it bodes well for BYD, bodes well for Tesla as well. Yeah, John, very good on NIO actually, very good. I mean, I think it's a good tactic for management to lower expectations and then beat it, especially with the bad momentum that the stock had. Always a good tactic. I don't know if they used it, but saying that you're going to have a lower quarter over quarter deliveries and then actually beating your own expectations is quite good. So 2023 deliveries totaled 141,601 units, a 17% increase over the prior year. But as you can see in the second half of 2023, they have been increasing their deliveries quite a lot, quite significant acceleration here. So again, great for the holders, great for the company as well. Li Auto, I don't know if they already reported. Maybe they have, maybe not. Let's see. Oh, yes, they have. Pedro, thank you. So Li Auto delivers 50,353 vehicles in December. 9 consecutive record-breaking month for Li Auto. Oh. I became Asian there for a second. This is a joke. Don't cancel me. So they reported over 50,000 vehicles. That's up 22.7% month over month and 137.1% year over year. So in Q4, the deliveries were 131,805. That's up 184.6% year over year. Their guidance was basically 126,500 at the midpoint. They beat it. So congrats to them. And as you can see, them as well throughout 2023, they have been going up and up and up each and every month. So, I mean, despite the price cuts war in China that Tesla initiated, pretty good year for Li Auto, pretty good year for XPeng. So yeah, not too shabby. Not too shabby. Best chip stock. I guess TSMC as NVIDIA cards is composed. Yeah, I mean, TSMC is not just NVIDIA, right? It's everyone at this point. I mean, even Intel uses TSMC. So yeah, TSMC always a great pick, unless, you know, geopolitical issues. ASML, good pick as well. But I mean, my only chip exposure right now is, I mean, right now it has been for a while, is Intel. I still think they can turn it all around and become pretty big, especially the foundry part of things. Still waiting for the big name to come out, but a diversified supply chain, chip supply chain is very, very welcome. Let's admit that. So yes, TSMC very strong, ASML very strong. Cannot go wrong with that. First quantum copper in Panama after the reopening of a pick of a mine. Any thought? Boy, to be honest, this is really out of my league. So I don't know. I'm not into copper or Panama, the Panama Canal, which I think China owns quite a lot of it. Plus they expanded the canal and they blame the drought on the fact that not enough ships can pass through it, but the fact that they expanded the canal means that, well, the water is just not as high as before. What's an EHang? EHang, so many companies that do the same thing, just doesn't make sense. EHang, nothing yet. So yeah, nothing yet for EHang, but let me Aerospace and defense, industrial, okay. Gaudi 3 in 2024, yeah, we'll see. I mean, there is a lot. There is a lot for Intel in 2024 and onwards. So, yeah, it's exciting year. That's the thing. If Intel can execute, it's an incredible opportunity. But that's a big if. Since Pat came back, lots of good things have gone their way. The stock took a beating. The company's profitability took a beating. I took a beating, but so far, so good. Still a long way to go, though. EHang has achieved type certification. Okay. Autonomous aerial vehicle. Oh no, forget. It's the flying vehicles company. Drone company. Yeah, the flying vehicle company, like the other one. What's it called? Joby? Yeah. Joby Aviation. It's the same basically, no? Or something similar. A drone company. China has great drone companies, sadly. I mean, did you know DJI, the famous drone company, is also Chinese? Took me until last year to know this. I have a DJI drone as well. Only used it once. Why did I buy it? I don't know. Just for the sake of having a drone, I guess. It's like the people that buy a pickup truck. Why do you need a pickup truck? Nobody knows. In case one day you'll need to move or stuff like that. So yeah, Joby. That's Joby. We also have, I think, no, not Beyond Gaming. Is this the ticker? Yeah, this is the ticker. If you don't like Tesla, consider China's leading EV maker. Wrong. Plug-in hybrids as well. O have 28% stocks portfolio in China. O meaning realty income? Really? Huh. BYD company secures deal to make electric vehicles in Europe. Huh. Interesting. I mean, it's crazy how the West has like open arm, open door policies for Chinese companies, whereas Western countries cannot enter the Chinese market without being on their knees. Really peculiar. But then again, if you read a bit deeper, you know who pays politicians. But we're not going to turn this into a political video. But you're saying realty income, first STLA. Stellantis. Yeah, I knew I recognized this ticker. What do you think about them? I'm still waiting for them to adopt the charging standard. I don't know why. I don't know why they're not doing it, but we'll see. Did I touch something here? Chinese history. Yeah, I mean there is a good book that what's it? Don't wanna. The book is called. I'll tell you in a second. Where is my library? Red-Handed. If you go and look the introduction of the book, you will understand what I'm saying with the West letting Chinese companies enter freely. So Stellantis, yeah, I mean, it's a huge company, right? It's a huge company with many brands under it. We'll see. We'll see what happens with them. Probably also sleeping a bit at the wheel currently when it comes to EV revolution, but yeah, we'll see. I haven't really dug that deep with Stellantis, to be honest. TGLS, what is that? Technoglass. Cool name, I'll give them that. Technoglass, it even pays a dividend. What do they do? Uh, Designs, produces, markets, and installs architectural systems for the commercial and resident construction in Colombia, the United States, Panama, and internationally. Huh. Interesting. Interesting. Even gets a okay rating here. Wall Street strong buy, Thinking Alpha analyst a buy, and then the quant a hold. Okay. Overall growth, profitability, momentum, valuation, all a good score. So, yeah, I didn't do a deep dive in Technoglass, but right now what we're seeing is okay. Stock is up 466% in 5 years. Quite a performance. Weird thing in the United States with the stations. Yeah, with Stellantis. All EVs can charge wherever they wish here in Norway. Yeah, I mean, yeah, well, if the Tesla supercharger network is open for everyone, then fine. Because, of course, there are some chargers that are available in many countries, but I don't think they charge as fast as the Tesla supercharger network. And yet, I mean, the difference between United States and Europe is that United States Tesla has built out a great network of chargers, so they have less of an issue, I would say, compared to countries in Europe. But yeah, I mean, Stellantis is the last one standing in the United States to adopt the North American charging standard. So I don't know what they're waiting for, but we'll see. I'll quickly get something to drink and I'll be back, says Arnold Schwarzenegger. Okay, we are back. We are back. Did I miss some questions? No, I did not. Okay, great. Now we have actually BYD here. So the Chinese EV giant posts 62% jump in 2023 vehicle sales. Maybe I'll zoom in a bit. Whoops. Okay, voila, much better. Put this here. Poof. Second. So, yeah, it's battery electric vehicles plus plug-in hybrids sold about just over 3 million vehicles in 2023, an increase of 61.9%. So they sold 1.6 million battery EVs, as well as about 1.4 million plug-in hybrids. So if Tesla reaches their goal, which should be reached, Tesla will outsell them. Tesla should sell 1.8 million EVs in 2023, so that's 200,000 more than BYD. Last year, BYD announced plans to build a plant in Hungary. Congrats, I guess. Questions. Could you look at NerdWallet? NerdWallet and Bill Holdings. Any thoughts that Chinese government will order the Chinese hedge funds to buy their stocks like in 2015? The thing is that, I mean, there's a reason why Alibaba hasn't bought back. I know that your question is a bit different, but buybacks have never really been pushed that much in recent years, right? So I don't really see the Chinese government focus on that, to be honest, especially not after they ruined so much company value throughout the last couple of years. But who knows? Maybe they will, maybe they won't. But yeah, I mean, when Alibaba is now generating billions of dollars in free cash flow each and every quarter, some would think that they could buy more of their own shares. Now, okay, they issued a dividend, but I think most holders would have enjoyed more buybacks than dividends, which are taxed. So, yeah. You said NerdWallet? NerdWallet. For some reason, I've heard this name before, but okay, NerdWallet. It is. NerdWallet. Please. They should have. Okay. Roundhill Video Games has the ticker symbol. Too bad. Too bad. NerdWallet. What do they do? Let's see. It operates a digital platform that provides consumer-driven advice about personal finance. By connecting individuals and small and medium-sized businesses with financial product providers in the United States, UK, Australia, and Canada, the company's platform offers guidance to consumers through educational content tool. Okay, so maybe that's why I heard about this company. Interesting. Let's see. Make smarter financial decisions with side-by-side comparisons. Less my my cup of tea. Less my cup of tea. Let's see here. Revenue goes up, good free cash flow. Shares outstanding has gone up quite significantly. Did they do some acquisitions or something, or raising money? Its market cap 1.12 billion. Last year it was up 53%. Valuation wise, yeah, PE is much cheaper than the mean, the 5-year mean, or in this case, the 3-year mean. EV to EBITDA, cheaper. Price to sales is a bit more expensive. Price to free cash flow, way less expensive. So, okay, interesting. Interesting. Yeah, EPS basically from fiscal year 2023 to fiscal year 2025, close to double. Close to doubling. So yeah, not bad. Not bad at all. Average price target from 7 analysts, basically flat from where we're at today. The second company you asked was Bill. Bill. Bill has more growth, top and bottom line, to be honest. More expensive here as well, 44.8 times. But yeah, the growth rates are better. Much cheaper than its mean as well, for all metrics, by quite a lot, actually, by quite a lot. Shares outstanding have gone up a lot in recent years. If you can tell me why, that would be great. Free cash flow per share has increased though in 2023, so maybe they've turned the corner. Definitely turned the corner. Interesting. Okay, interesting. But obviously I need more, how do they say in the Ivy Leagues, a bit more context. Thoughts on PAT? UiPath, they've been doing quite well. Not just the stock, the business itself. I thought somebody would buy that company when it was much lower. What was it? Even closer to 10, no? Yeah, $12. $7 billion market cap. I was sure somebody was going to swoop in and buy it. Yeah, good growth, top and bottom line, profitable. I think free cash flow should be was positive last quarter. Yeah, it has come down, but at least it was positive. With regards to valuation, not sure it's on your watch list. Okay. If it's on your watch, if it piques your interest, then yeah, maybe find out why it has gone up. Because if it's not an acquisition, then yeah, I mean, it's a pretty big dilution event. Valuation wise of UiPath, I mean, if you look at the traditional metrics, let's say here, right? It's not cheap at all, but company is growing quite fast, growing industry, good product from what I've been hearing and seeing. Here as well, EPS growth rates, quite nice. Price target, the average right now with 22 analysts, 13 say hold, 8 say buy. The difference between the average here is 4.5% to the downside. Again, will probably change a month and a half. No, I think they're reporting quite late, 2 months from now. Earnings report might change But yeah, company is definitely doing much better than before. Much better than before. I think that was because of the change in sales structure, not structure, but the vision. The vision. Hershey's. We talked about Hershey's in a dividend video not so long ago. If you want to watch that, 3 strong, cheap dividend players. Hershey's down, I believe, 35%, no? Since the peak or something like that. So yeah, ooh, down a lot. I think it's something like that. Again, like I said in the video, if you want more information, you have to go to watch that video because pretty good information there. Overall, price of cacao is high. Has been high for quite a while. Analysts say it's not going to go lower that fast in 2024. And since Hershey chocolates, you need cacao. And if it's more expensive, then they'll pass it on either to you, the consumer, which means the products will be more expensive, which might mean that they might not sell that much, or they are taking the hit, which means the company itself will be less profitable. So there is that, plus shrinkflation. Expensive products, much smaller, such as this. I don't know if you can see, maybe you can. Look at how small this Mars bar is. I mean, I bought the minis pack, but I have a feeling they've become even smaller than before. Smaller than before, same price. I got robbed. For real. Anyways, Hershey's shares outstanding have come down throughout the last 10 years. Free cash flow per share has gone up. Dividend yield, dividend yield 2.56%. Valuation is obviously much lower than before, as you can see. Since the summer, it has come down. It's crashing down actually. So yeah, there is that. Since this is a dividend company, let's look at the dividend. In the last 10 years, annualized growth of 9.44%. If you bought 10 years ago, you would be getting 48 cents. Now you're getting $1.19. Now, back then, the stock price, I don't know what the yield would have been, but your yield on costs right now would probably be extremely high if you have held for the last 10 years. That's also basically also the thing that's important when buying dividend paying companies with a low yield, let's say 1%, even 2%. If it's a growing company, yield on cost becomes an important metric. Alexander, Happy New Year to you as well. Is Sea Limited a good stock to invest for the long term, or is it more interesting in the short term? For some reason, Sea Limited always pops up as a question during the live streams. So I'll repeat myself again and again, but I'll tell you already right now, there will be a video Sea Limited compared to Coupang coming out probably tomorrow. Not sure, but probably. So this is basically Sea Limited right now. Market cap 23 billion, forward PE 69.2 times. Of course, during the pandemic, this was a high-flying stock. The business was also doing much better, by the way. Growth expectations, EPS for fiscal year 2024, not much, but big acceleration in fiscal year 2025, close to 90% growth. Yeah, double-digit growth for sales, 11 and 12% for the next 2 fiscal years. Look, right now they have to prove to the market that they can grow in a profitable way. They proved it for 1 quarter, and then last quarter they went back to normal, and then there were some reports of them investing in other markets and trying to grow there, which failed 2 years ago, right? With expansion in Europe, which never happened, which shouldn't happen. Just focus on your strongest markets. Plus there is extreme competition, right? TikTok Shop, Temu, Shein, Amazon, Mercado Libre, Alibaba. I mean, there is enough competition. And then it remains to be seen if they can turn that ship around with Garena Free Fire, which was the profitable side of things, which basically was the subsidizing part of the business for for the e-commerce one. So we'll see. We'll see what happens. I'll compare it to Coupang in the next video, so we get a better comparison, because a lot of you have been asking about C-Limited in the last couple of days, so, and about Coupang, so we're going to do that. Cheers. By the way, how did you celebrate the New Year's? Did you go out, at home, chilling, party? Let me know in the chat. And by the way, I don't know if you guys know, but I've been playing around with the shorts format lately. I don't push it to the subscription page because I don't want you to get too many notifications. It's basically me reacting to financial shorts, which have been doing quite well, actually. I don't know if you watch one of those, basically me watching a short and then adding literally 5 seconds of comments at the end, because you only have 60 seconds. Some dumb comments appear in the comment section, but I don't really care that much. Chill. Yeah, okay. Chill. Chill is fine. Chill is good. Any tennis fans here, by the way? With the upcoming Australian Open, Rafael Nadal comeback. I believe he's playing tonight. Well, in Australia. I think my camera shut down. Yes, it did. Much better. The Rich Dad, yeah, the Rich Dad short. I mean, he gets me a lot of views, to be honest. Yeah, it's a funny one. I mean, he wrote, the book is very good, right? If you read Rich Dad, Rich Dad, Poor Dad, it's a good book. It's a good book, but then I don't know what happened to this guy. Maybe just because they were giving him so much media attention, then he completely flipped. But yeah, every time, oh, you know how I make money? That, not this. This has no value. Talking about the US dollar. I use that to buy cattle and cows and this and that. Then Japanese people are stupid, even though he's half Japanese, which... Anyways, do you like Crocs? I wear Crocs. Does that answer the question? Here. Not sponsored. I would love to be sponsored by them, by the way. I've been wearing Crocs for a decade now. Crocs. Yeah, I mean, with Crocs, there are fears that it's a fad, that there was a hype because of TikTok, the pandemic, blah, 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 pushed sales up. It's profitable, so that's great. But there are fears that it cannot continue with the current growth rates, with the current profitability, with the acquisition of Hey Dude, and stuff like that. We'll see what happens. It's on my watch list. 7.8 times forward PE, so not expensive. Not expensive. 5-year mean, the forward PEs, EV to EBITDA, price to sales, lower than the 5-year mean. As you can see, it was more expensive during the pandemic period, as always, as with many stocks. They've been buying... Why do I have this? Go away. They've been buying their shares in the last 10 years. Free cash flow per share has increased quite a lot. So that's also a good sign. The average price target right now, 13 analysts, 4 hold, 8 buy, 1 strong buy, 30% higher than the price we're at today. So despite that, despite it actually being a quite strong company, it could be that we're going into a down cycle and then, I don't know, sales growth never reached the same highs as before. Could be that's the risk with these types of companies. Martini Henry says, I haven't read it because he seems like a conman. Well, he sounds like one maybe now, but the book is great. The book is really a good book. Easy to understand. So yeah, it has not become a very popular book because it's a bad book. Let me tell you that. By the way, what's your favorite book about investing, finance, behavioral psychology, or stuff like that? You have any good titles? Let me know in the chat below. What did I want to check? Nothing much here. Bitcoin is almost close to 44,000. Cool. One Up on Wall Street, yeah, it's my personal favorite as well. Peter Lynch is my favorite. Very easy to understand, puts it pretty simple. To be honest, if someone asks me what book should I recommend, would like me to recommend, I don't know why everyone's so focused on the Intelligent Investor, right? Legendary book. But let's be honest, many of the aspects there are irrelevant today in a world of AI tech, very, very fast changing world. I wouldn't recommend it as a first book. Just my opinion. Yeah, One Up on Wall Street seems to be a fan favorite. For good reasons. Any of you hold a cryptocurrency, Bitcoin, stuff like that, or we're not touching those types of things? With regards to the what's his name, Robert Kiyosaki, the Rich Dad Poor Dad, I found it interesting when he talks about I only buy assets that produce something, and then he talks about Bitcoin as well, which I don't know what it produces besides high energy bills, but okay. But Warren said, I know. But let's be honest, Warren without Apple is not really performing that great in the last 10 years or so. And again, it's different times. I mean, of course, if I could have bought Coca-Cola for 23 cents, great. But if I bought Coca-Cola back in 2000 or 98, probably wouldn't have bought it because I was 4 years old, but I would have been up 100 something percent. Wow, incredible. Plus, of course, the dividend reinvestment as well. But again, it's very, very different times today than before. I mean, even before, look at this increase. Huge increase, right? From 75 to the year 2000, it went from 20 cents to $21. And then it went from $21 to, let's call it $60 in the next 23 years. Wow. The majority of the gains here were made before I was born, before many of my viewers were born as well, or we were just babies. So yeah, I mean, with Coca-Cola, it's like this, which I think he owns 400 million shares or something like that. What's up, AO? What's another one? Bank of America. Same thing. The majority of the money was made before 2000, before 2006. Afterwards, not that much. I mean, unless you cut the bottom here at $2.03. Then yes, would have been a 10-bagger, even more. Plus dividends, of course. So yeah, not a Warren hater or something, but people need to stop repeating the same thing without actually thinking. If I were born in 19... How old is he? I don't know. It's in 1930. Yeah, I would have also been a billionaire if I invested money back then, because, I mean, look at this performance. I would maybe be a billionaire right now if I didn't sell. That is the thing. The thing I have to say for Warren is fine. Okay, he bought very, very early on. Very, very early on. But he held on to the stocks. Even though, if you look at his portfolio throughout the years, he bought and sold a lot of companies. So, yeah. Yes, you cannot apply what anyone says without context. Yeah, especially not with someone that's 90 plus years old and has been investing for the last 80 years. It doesn't work like that. What do you think about parking some cash on PBR, collecting dividend before allocating X? I have, well, no, never mind. I have a dividend paying portfolio, but I'm putting every payout in the dividends. PBR meaning Petrobras, right? 18% yield. I mean, phew. Why is it so high? Sales down, EPS up for fiscal year 2023, but fiscal year 2024 EPS down. Whoa, what happened here? Interesting. Yeah, I don't know. I mean, there has been a whole story, no, with Petrobras in Brazil, with Lula becoming president. Crazy, you can go to prison as a corrupt president and then be president again. I don't make the rules, but okay. What do the people say here? Lower diesel prices. Analysts see more cuts coming. Petrobras CEO says Brazil will not cap oil output as part of joining OPEC. Petrobras plans $102 billion spending production ramp up over the next 5 years. Interesting. The dividend bonanza continues. Okay, let's see. The company generated $8.4 billion in free cash flow in the last quarter and saw 9% production growth. Okay, so Petrobras also returned a lot of cash to shareholders, which translates to a 15% dividend yield. Petrobras, how can they, how is this a normal thing? 15% yield? Yes, this I knew. No, they either make a lot of money, which I think they do. Very free cash flow. Yes, in the third quarter, Petrobras 13.6 billion in EBITDA, which translated to after capex 3.2 billion, to free cash flow of 8.4. The energy company paid. Okay. Wow. Okay. So free cash flow 8.4 billion, and out of the 8.4, 4.8 in dividends. Okay, now I can understand why. Small buyback. Yeah, I mean, it's very interesting. Very interesting. Of course, if business is not booming or not going as expected, forget about the 8.4 billion. But I mean, they have a pretty big cushion here. 8.4 billion in free cash flow, only paying 4.8 billion in dividends. Even if free cash flow drops, they have plenty of leftovers to pay. So yeah, I mean, very interesting. I mean, if you can get 15%, you're already beating the market. Very interesting. Very interesting. I have an uncle in Brazil, so I'll ask him what if this makes sense, what he thinks of it. Very interesting. The yield is risky, however, and the total amount of dividend payments received by shareholders in the future may be below those paid in the past, of course, especially if energy prices drop, as we've seen the reports before. Shares of Brazilian energy giant are also cheap, 4.5 times PE. Yeah. Yeah, it's definitely worth a look. Definitely worth a look. Probably put it in a future dividend video. Yeah. Interesting. Very interesting. Cemex. Cemex is the best construction Latin America play. They also build houses for Israel. Huh. Cemex. Is it this? Let's see. Obviously, they sell cement. It's in the name. Ready-mix concrete, aggregates, urbanization solutions, and other construction materials worldwide. Okay, so why are people so pessimistic on this company, even though factor grades here are great? Let's see. Revenue growth seems good. Free cash flow seems good as well. Let's Cemex. For a second, before I go back to this, which is better, Enphase or First Solar? I mean, Enphase, you will see next quarter. Next quarter will tell us a lot. With rates expected to come down should help them, but still rates are pretty high. We'll see how much revenue will drop in this quarter. I mean, the expectations are a big drop quarter over quarter, but maybe they sandbagged and they might be that. So we'll see. First Solar, I never really dived that much into it, but in the last live stream, I think we looked at it for a second. Looks reasonable. And there is also another company. Oh, I forgot the name. A company that does huge solar panels for fields with an automated thing. I don't know how you call it. But yeah, 1 second. Maybe Pierce will tell me. Skyworks Solutions. Was it Skyworks Solutions? I don't think so. I don't think it was Skyworks Solutions. Maybe it was. I don't know, never mind. So yeah, Enphase, First Solar. With Enphase, we'll see next quarter what happens. Of course, the stock is up quite a lot from 70, what was it? 70, 80 to 100 and something right now. First Solar, poised for growth in a post-inflation environment. Yeah, but the post-inflation environment can take some time. In December, we have your First Solar signs. Can you see it? Yeah. First Solar signed deal for sale up to 700 million in 2023 IRA tax credit. Yeah, could be a good shout. HLO. Hey, Fabio, is this code for something? HLO and then you write run. Where do I run? Run. Maybe it's also a ticker symbol. This Sunrun. Ah, you're helping me out here. No, it's not. It's not Sunrun. Yeah, Solar Edge is another one, but Solar Edge, I mean, same boat as oh yeah, once hello. So hello back. Yeah, Solar Edge in the same boat as Enphase. I mean, they pre-announced their earnings last time, which crashed their stock and crashed Enphase stock as well. And maybe it is Solar Edge, but I don't think so. As you can see right here, it's this part right here from the pre-announcement. Poof. So yeah, I mean, it doesn't really get that good of a grade compared to First Solar, for example. Let's see Enphase. Enphase is getting good for growth and profitability because free cash flow is not a problem really for Enphase. As you can see, there's been quite a big rebound here. When the market got this sentiment of rate cuts, we went from $75 to $132 in a matter of 2 months. So yeah, but look, could be that they report earnings and not great, right? Not great, sentiment is still not there and the stock goes back down. It could be that during the earnings call, suddenly they say, look, we're seeing some improvements and okay, stock goes back up, or it's already baked in. Could also be, because we've seen good results, bad stock reaction. It happens. I have to find the name of this other stock. If I wrote it down somewhere here. Ah, voila. Found it. Array Technologies. Finally. Yeah, Array Technologies was the company I was talking about. Compared to the others, good, okay performance. It's down 11%, but still okay performance. Good grades. Summaries here. Looks okay. Yeah, that was the company. That was the company I wanted to talk about. Thank God. Thoughts on Oracle from Sylvia. Sylvia? Yeah. Someone asked me this last live stream. Same thing. Solid cloud player, tech player, software player. Should do okay. I mean, every big cloud / software company will do quite well because we are still early days when it comes to cloud. I mean, the global IT spend, right? I've repeated this countless times. It's 90% of global IT spend is still done on-prem. And if you think that the majority of it will switch to cloud, whenever that will happen, the likes of the big guys, AWS, Azure, Google, Oracle, IBM, they'll Snowflake, Datadog, you name it, everybody that has a link to this will benefit from that. Do you think on-holding could be a major player in sports industry in the future? So the first and last video I did on was exactly that. I compared this to the launch of the Air Jordan shoe, right? Federer, one of the greatest tennis players of all time, launches that. I said he's going to sponsor some tennis players. A couple of months later, he did exactly that, sponsored Ben Shelton and Swiatek, #1 women player, probably some other players as well, but maybe not, I didn't know that. But yeah, could be a big player in tennis, definitely, in the years to come. It's not cheap to sponsor athletes. The shoes itself aren't cheap either. I don't own any shoes, but I've seen plenty of people wearing it. They say, "Oh, great running shoes." Some say, "No, I prefer another company, also pretty famous recently. I forgot the name." So it can be a major player in tennis. I don't know if it's going to be a major player in other sports, if I'm being honest. I missed a question before from someone, I think. Or maybe not. I don't know. Never mind. Can you check Vital Farms? Man, you guys come here with names I've never heard before. Vital Farms. Good ratings, it seems. What do they do? I know, something with farm. It's a food company, provides pasture-raised products in the United States. It offers shell eggs, butter, hard-boiled eggs, ghee, I don't know, and liquid whole eggs. What? Shell eggs, hard-boiled eggs, liquid whole eggs. Okay. Interesting. Growth-wise, pretty good. Forward growth of 28%. Profitability, yeah. Cash from operations, 22. Okay, it's much higher than the 5-year average that they had, so okay. Operating cash flow, 31%. Yeah, interesting. interesting company. Let's put it in the Koifin. So yeah, 32 times forward PE. Some growth ahead of it, top and bottom line, so that's good. Interesting. Valuation wise, much cheaper than before, but doesn't say much because it hasn't been that great before. Okay, Hoka. Yeah, Martini Hoka is the name I was looking for. It's the people that do not own on shoes, they always say, oh, Hoka is better. So yeah, okay, can't please everyone, I guess. Shares outstanding have gone up a lot. No, not a lot, but has gone up. And free cash flow got hit. I don't know what happened, but it happened. Maybe, I don't know. I don't follow the company, so I don't know what happened. Analysts, 8 analysts, 3 hold, 4 buys, $17.5 price target, which is 12% higher than it is today. By the way, anyone here watch the new movie Ferrari? With Kylo Ren, forgot the name, Adam Driver. If yes, tell me it's good, because I'm gonna watch it tomorrow. How long New and SoFi will pull back? Want to add buy level 6.5 to both. Is it realistic? Probably not. Probably not. I mean, what's New? New is at 8.3 and SoFi is closer to 10, right? 9.95. Yeah. No, I don't think it's gonna drop back to 6.5, to be honest. Unless something crazy happens with the market, I don't think we're going to go back. I don't think we can have a pullback in the market, no problem, but for it to go back to 6.5, those stocks will need to get hit quite badly. So Bruno, no problem, my pleasure. Fabio with the Take-Two Interactive GTA question, which was asked also actually yesterday during the gaming stream. So I'll show you. I'm obviously going to buy the game when it comes out. It's probably going to cost a lot more than a normal game, but probably worth it. Hopefully. I mean, it took them 12 years to make this thing. It will come out 12 years after the last game came out. But yeah, this is Take-Two Interactive. Stock has done well in 2023, like many other stocks. EPS come down, but the expectations are, in my opinion, baked in. In my opinion, it's baked in because if you look at not this is, I know the answer for once. This is Zynga, the acquisition of Zynga. Shares outstanding have gone up. But if you look at the valuation metrics compared to its mean, we are now more expensive. More expensive than before, probably because, well, everyone is expecting a super successful launch of GTA 6. Some analysts saying that it will add $1 billion like that at the start, which is probably not that far-fetched. But yeah, it's expensive. If you compare it to EA, for example, EA is cheaper. The garbage new FIFA game. Yeah, maybe. Gassed out gaming, maybe. New highs. I mean, I don't see why not. If we get rate cuts in 2024, I don't see why not. Again, unless we have new surprises. which we've been having since 2020. So yeah, I will get 4 more GTAs in my lifetime with this release date. Yeah, me too. Actually, more. More? Yeah, more. Unless something bad happens to me. But I'd like to go to space, so maybe not that many. But yeah, to be honest, the thing is, I don't know what GTA 6 will bring to the table, because I don't know if you play the offline game or if you've also played the online game. I swear the online game is crazy. It's incredible. I've entered once into the role-playing aspect of GTA 5. Some people are completely nuts. I mean, I was working as a clerk somewhere. That was my role. Some people were as technicians, working in a garage, stuff like that. You can talk to people, right, in the GTA roleplay aspect. In the game, you can talk to them. When you pass by them, there is like this close proximity audio. People take it way too seriously. I mean, if you go into the garage and you break one of their cars, they start to curse you out and they kill you in the game. They kill you in the game. But yeah, the online mode is incredible, and that's how they're making their money, right? Even 10 years after the game is released, it still makes them a lot of money. And online is the way to go. You launch DLCs, you launch new modes, new skins, new aspects. Yeah, I didn't get into the role-playing thing either. I tried it once. It's very, very compute intensive as well. Yeah, get into some servers, this and that. So I was like, okay, screw it. Let me go back to the offline thing, which was good enough. But yeah, I don't know if they need to make a GTA 7. Because if GTA 6 is so great, why not add to GTA 6, right? Sell it as DLCs, or maybe just give DLC for free if we can spend money in the game some way or another. I don't know. I mean, Fortnite is free, right? For example, Fortnite is free, but we get updates, updated maps, updated seasons, chapters, whatever. How do they make money? Skins and battle pass. And partnerships, sponsorships, or something like that. They don't need to create a new game each and every time, which is also why it has been so successful. But we'll see. We'll see what they've been working on. Because if it's only graphics that became better, then why wait so long? If there is like a new aspect in the game, I don't know, something that mixes real life with the gaming life, even though it can be very dangerous if they do that. But we've seen in the trailer, right, these social media aspects of things in the game, news. I've read rumors, but that was a long time ago. There's stock exchange, currencies in the game, stuff like that. So yeah, we'll see. We'll see what happens. What's your view on Sentinel-1 in the upcoming years? Wasn't there an acquisition rumor for Sentinel not so long ago? Definitely not a cheap stock, that's for sure. Yeah. Since it became public, crashed, normal, like every IPO back in 2021. But yeah, not a cheap stock. It's growing quite fast. But yeah, I don't know. I think there was an acquisition rumor, no, for Sentinel-1. Yeah, it's definitely a good product. But then, I mean, for investment point of view, you have CrowdStrike, you have Palo Alto Networks in the cyber space. Also not that cheap, by the way, but still. Yeah. It's definitely a good company. It's not cheap, let's call it. It's not cheap, but Sales is expected to grow quite fast in the next coming fiscal years. Bottom line also going from negative to positive. So definitely positive views on SentinelOne. That's one of the aspects in my portfolio where I have no exposure to, which is cyber, which is a bit of a shame. But oh well, we'll see if my fintech investment pay off in the short term. Maybe I'll get exposure to cyber. We'll see. We'll see. Oh, we're over 2 hours already in a live stream. Well, that was fast, which is fun. During market open days, by the way, the live stream will not last 2 hours. It will be, I think, an hour or so. I'll start 1 hour before the market opens and then spend 10 minutes when the market opens, and that's it. Yeah, fair enough. What do analysts say here? Average $25, 7% lower than where we're at today. Okay, big deal. Not that much. Expected to be free cash flow positive in calendar year 2024. So there is that. Definitely interesting, but I don't know why, I'm pretty sure. By the way, for those that only join right now and ask yourself what the heck is the thumbnail, this is the thumbnail. If you started 2023 with 10,000 and you invested in the best performing stocks of each month, you would end the year with $313,671. Yes, I know it's ridiculous. We don't have a crystal ball, but I thought I'd share this because this was a pretty funny article to read and pretty remarkable as well, how fast you can go up. So, yeah, SentinelOne. I'm pretty sure I saw. Okay, so could never pronounce this name, but okay. Cybersecurity company set for a strong 2024, according to them. CFO sells stock worth 1.35 million. Good for him. Full year revenue guidance, stock jumps. Okay, so maybe I was dreaming. Do you think fintech stocks can have crazy runs of over 10x over the next 10x? 10x is a lot. 10x is a lot. A lot of things will have to go right for some fintech stocks to go up 10x. Yes, some companies like SoFi, for example, have a lower market cap than others. So their 10x would mean $95 billion in market cap unless they buy back their own shares by a lot, which, let's be honest, I don't see them doing that anytime soon. We'll see. StoneCo, 10x there is 55 billion in market cap, or could be less if they buy back their own shares. Look, their growth rates are incredible for them, so could be, but there is to 10x you really need one to enter when the stock is extremely undervalued and the market is broken, and two, the company needs to execute perfectly and grow into a market and industry that is growing or expected to grow quite a lot as well. Same with dLocal, StoneCo, both of them $5 billion range. PayPal, for example, I don't see how this will 10x. Could, in the long run, if they keep on buying their own shares and free cash flow keeps on executing, then yes, your returns could be 10x thanks to that. But I don't know if it's in the next 10 years. I mean, 10x in 10 years, you think it's not much, but it's you rarely see this. Yes, we've seen crazy numbers in the last couple of years, but don't think that the last couple of years is normal. it's not. Far from it. Far from it. So yeah, we'll see. We'll see what happens. Anyways, I think I'll drop here. Was fun. Was a fun session. Thank you all for joining. We'll do maybe tomorrow. Actually, I'm a bit busy before the market opens, but we'll see. I'll try because maybe someone has to come and fix something here. Anyways, thank you all for joining. We'll do more live streams in 2024. Go watch the fintech videos if you have not. Happy New Year's. Thanks for joining, and I'll see you all in the next one. Bye-bye.